look, Bitcoin's going to grind up 30 to 60% a year for the next 20 years. And my long-term risk cost of capital is like 29% for 20 years. That being the case, rather than try to time the market, it seems to me like a better idea would be go mortgage your house for 30 years at 3% interest or 6% interest, and then make an investment for 30 years that where you have 6% cost of capital and get 30% return on the capital, and you're getting 24% boost. So I think it's much better to figure out how you raise capital and lever the trade, or how you build a business that actually cashes in on that volatility. I would say every macro theory about if the bad thing happens, that's good, and if the good thing happens, that's bad, and if enough bad things happen, that's really good, because then a bad thing will happen, which will be good for us in the midterm. I get it, it's all true, but I just don't choose to play the game. My view of this is that's a game for professionals. And, Howard Marks, he says the problem with all these day traders is the stock goes from 10 to 11, and the guy bought it at 10 and sold at 11. And then it goes from 22 to 23, and he bought it at 22 and sold it at 23. And then it goes from 33 to 32, and he shorted it at 33. And he brags that he made $3. Yeah. But the problem with the whole thing is if he just bought it at 10, he would have made like 10x that much money with no stress, no anxiety, and no risk.
Michael Saylor isn't just talking about Bitcoin. He's putting serious money where his mouth is. The chairman of Strategy just made another bold move, snapping up 15,355 Bitcoin for a jaw-dropping $1.42 billion. That's roughly $92,737 per coin, a price most people would consider the top. But for Saylor, it's just the beginning. Not only is Strategy stacking BTC, but they're earning from them too, reporting a solid 13.7% yield on their Bitcoin holdings. And despite the sky-high prices, Saylor still stands firm on his belief. He'll keep buying Bitcoin at $1 million, even $10 million per coin. That's how deep his conviction runs. With this latest purchase, Strategy now holds an eye-popping 553,555 Bitcoin. That's over 2% of the entire Bitcoin supply. One company, one vision, and a whole lot of skin in the game. So what does this mean for the future of Bitcoin? Let's get into it. But before we dive back into the video, do me a quick favor. Hit that like button, drop your thoughts in the comments, and share this with someone who needs to hear it. And if you haven't already, subscribe to stay up to date with everything happening in the Bitcoin and crypto space. Thanks for watching, and now let's jump back in.
Bitcoin has matured over 4 years, and that's a good thing. We used to have, extremely highly levered, poorly capitalized companies driving the market, like the offshore exchange like FTX and Three Arrows and Terra Luna and the like. And the market has matured such that now you have large pools of more permanent capital, like BlackRock's capital, IBIT, or Fidelity, or Wall Street. And that will create less volatility, lower drawdowns, but it will drive the price up. And on the other hand, it's kind of like saying, your family came to Manhattan in 1700 and you bought up a bunch of land, and then you went back to Europe and you told everybody that Manhattan's going to be the greatest seaport in North America. And here we are in 1800, Michael, and your family owns like 47 blocks of Manhattan, but the prices of Manhattan real estate have gone up by a factor of 20. Isn't it getting it harder for you to do business in Manhattan? And the answer is, well, the price is going up, but there's a lot of other people that are in Manhattan that do things that we can't do. And I'd much rather have other businesses and other pools of capital. Like on the day that Apple and Microsoft and Google enter the Bitcoin ecosystem, the price will go up, but the risk will go down. And one of the interesting things about volatility is, like, if you look at the risk in the space, if you have something which is 10x over collateralized by Bitcoin and the volatility is 60, well, there's a risk. And one way to drive down the risk is to increase the collateral, but the other way to drive down the risk is decrease the volatility. So it turns out you're better off being like 3 times over collateralized with an asset with a 30 vol than 10 times over collateralized with an asset that's a 70 vol. And so I think that's what's happening now. The industry is growing up. It's becoming more secure. It will be accepted by banks. When your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin. And when your bank calls you on the phone and says, you know, you really ought to buy Bitcoin, it's a digital monetary alternative, and when they recommend it, it'll cost you $10 million of Bitcoin. And right now, no bank's going to recommend it, and they're not going to help you buy it, and you're going to have to jump through hoops, and you're going to feel really nervous about it, but you'll get to buy it around 100,000 or a little bit less than 100,000 of Bitcoin. And I think they're all three the same risk-reward proposition, and I bought it at 10,000. I'm buying it in billions of dollars of quantity at 100,000. I'll be buying it at 1 million. I'll be buying it at 10 million. And if you're back here interviewing me when it's 10 million a coin and you're going to say, Michael, it all worked out, but you know, Bitcoin's 1,000 times more expensive. And don't you feel bad that you convinced all these people to buy Bitcoin at 10 million a coin? I'm going to say, well, Bonnie, you know, the entire ecosystem is much less risky now, and it's still the best investment option. I think it's still better than buying the S&P index. It's still better than buying a warehouse in Siberia. I'm going to keep buying it. It's just like buying Manhattan real estate in the year 2025 when your family started buying Manhattan real estate in the year 1700.
Can you comment on BMAX?
Yeah, so BMAX is an ETF that launched about a week ago. And there's a whole, one of the great use cases of Bitcoin is to put it in the middle of a capital structure of a publicly traded company. And if you have a publicly traded company, it causes your equity to be very volatile. So like my company's the most volatile equity out of the S&P 500 universe. Sometimes a volatility of 90 to 100. Well, when the volatility of a public company gets above 45, you can sell convertible bonds because convertible arbitrageurs actually are able to sell that volatility or extract it, and that pays the cost of the interest. So convertible bonds make sense for companies that have volatility, but if your use of proceeds of that convertible bond is to build a building or to invest in a long duration project, it might take 3 to 5 years before you know that the investment was profitable. So most companies that issue convertible bonds only do one and done. They issue a bond and then it's 5 years before they issue another one. And that's because their investment cycle is so slow and it's very heterogeneous. And the source of their volatility is normally uncertainty about whether the company will be successful. Most well-run companies, they aspire to get rid of volatility. For example, if you're a CFO, you would brag, we have no volatility on the balance sheet. We can never lose any money. And then if you have a P&L, you want to sign your customers to 3 to 10-year contracts with escalators every year. Look at Microsoft. No volatility on the balance sheet, 3-year enterprise agreements that roll over. And the CFO is renegotiating 1/12 of those agreements every quarter. And so you never have more than 8% of your revenue ever in play, and you can forecast out. So that's best practice of a conventional company. If a company capitalizes on Bitcoin, you could sell a $1 billion convertible bond. You could put the money to work in 1 week. You could announce that it was profitable the next week. So the investment cycle isn't 3 years. The investment cycle might be 3 days. Okay, then you could go back to the market. You could issue another convertible bond. You would make the same exact investment. The benchmark of profitability is whether you accrete Bitcoin per share. You could say, well, what if the market doesn't really care about Bitcoin per share? Well, the equity investors in a Bitcoin company care about Bitcoin per share. They've self-selected. So when you're on the Bitcoin standard as a public company, you can issue convertible bonds because you're going to have the volatility. You're going to have a very fast investment cycle. It's homogeneous. And you can actually create a set of metrics to describe whether it was accretive or dilutive. So my company pioneered that. We actually became the biggest convertible bond issuer in 2024. We're the biggest convertible bond issuer this year. We're so big that we're actually getting to the point where we're outgrowing the convertible bond market. And so the shorts and the cynics say, well, you can't keep doing that because you've outgrown the market. Well, and BMAX is the answer to the question, how do you grow the convertible bond market? The reason that the convertible bond market is a stable set of capital is because most of the people in it are convertible arbitrageurs, and you have to be a specialist. And so those bonds are sold 144A over the counter to specialists who engage in convertible arbitrage. But in fact, those bonds would be very useful to someone that wanted to be a Bitcoin investor, because those bonds historically up until now have outperformed Bitcoin. So if you wanted to actually buy a bond that performed like Bitcoin, maybe you want Bitcoin upside, but you want limited downside or a different downside exposure, you would buy a Bitcoin convertible bond. But you can't, because the bonds are only traded to qualified institutional buyers. So BMAX is an ETF that is actually plugging an over-the-counter institutional market into the general public market. So you could boil it down as to say, well, now there's a way for a retail investor to buy convertible bond exposure in Bitcoin-backed converts. But you could also say, it makes it much, much easier for even an institutional investor because they don't have to trade over the counter. Their over-the-counter markets are dark. There are wide bid-ask spreads. They're very inefficient. They're very illiquid. And so BMAX is creating liquidity, availability, transparency, and a certain degree of continuity. And I think that as instruments like that come out, right, I would say the most valuable ETFs, by the way, they're ones that let a retail investor or a diversified investor very quickly put 2% of their portfolio into something. Like, I want 2% in gold in like 1 minute. I want to own 2% of the real estate in New York City. You need a REIT to do that. I want 2% of Bitcoin, right? Or I want 2% of Bitcoin-backed bonds. If you have an instrument like that, it's differentiated. It really is doing more than stock picking. I'm not just buying 3 stocks in the ETF that you could have bought. I'm literally crossing the 144A barrier, and I'm buying an institution in an institutional over-the-counter market to make available to you on Robinhood. And so I'm excited about things like that. I think it's going to grow the convertible bond market. It's going to bring new types of investors to the market. I would say my company has expanded the market because we have found, in my opinion, one of the great use of proceeds for convertible bonds. What are we doing? We're building a digital building in 1 week. How many are we going to build? We're just going to keep building them, right? What if you could do 100 bond issues and build 100 digital buildings and just keep coming back over and over again? That's good for the investor. It's good for the market. It's good for the issuer, right? And BMAX is just part of bringing that idea to the general public.
And that's a wrap on today's video. Bitcoin is rewriting the rules of the global financial system. And right behind that revolution is Michael Saylor, leading the charge as MicroStrategy keeps stacking more BTC like it's the new gold. If you got some value from this video, let's keep the conversation going. Drop your thoughts in the comments. I'd love to hear your take. And hey, don't forget to like the video, share it with someone who needs to see this, and hit that subscribe button if you want to stay in the loop with daily updates on Bitcoin and the entire crypto market. Thanks for watching, and I'll see you in the next one.